Hi, this is Bri Lynch, Head of Market Insight at EquityZen. I'm joined here today with Phil Haslett, co-founder and Chief Strategy Officer at EquityZen. And we're here to talk about, trends that we're seeing in the private markets. What we've talked about a lot in the past is how value creation has moved to the private markets. 20 years ago, companies were 5 years old when they went public. Now companies are 10, 15, 20 years old by the time they go public. And that has real implications for investors when they think about their portfolios, especially in today's market. We've seen that the classic 60-40 equity bond portfolio really isn't, giving investors the types of returns that they're looking for. And specifically, it's led to this rise in alternative assets. So that's what we're here to talk about today, and how private markets really play a role in reshaping the alternative landscape. Thanks for joining us, Phil.
Yeah, thanks for having me.
So to kick things off, we're hearing a lot more about alternatives. How big is this trend, and why are investors flocking to it?
Yeah, well, we've kind of see it empirically in data too, that retail investors are kind of increasing their exposure to alts. As you mentioned before, it used to kind of be this very vanilla 60-40 between stocks and bonds, but increasingly investors are putting, between 5, 10, all the way up to maybe 30%, depending on some of the data we've seen from Cerulli and Deloitte, into this asset class, probably to kind of balance out their portfolio, mainly because a lot of companies remain private longer. A lot of different assets aren't available in the public markets. And particularly because some of these alternative assets are a little more insulated from the day-to-day volatility you might see in the stock market or even the bond market these days.
Sure. So you talk about dampening volatility, diversification, obviously big points, and something we've heard a lot is a crucial benefit to investing in alternatives. But what about returns? Does the performance of private company investments justify the investment for many investors?
Yeah, we would say yes. We looked at data for particularly VC and growth equity returns, and they've actually outperformed other asset classes for the last 25 years, particularly public equity. And so this isn't just kind of a blip. This takes into account a longer period of time, and we think it's a secular trend that's not really going away. I'd say one of the arguments for why that's happened is because you've got innovative companies that are growing a lot while they're private and staying private longer. And so the returns are often generated while they're private companies rather than they're public. And that's a big kind of secular change from, say, the late 90s, early 2000s, when we think of kind of the dot-com bubble and burst, which was that companies actually grew materially when they were public rather than private. And we've seen things kind of flip on its head. And this is exactly kind of what investors have been looking for on our side. We get feedback all the time about wanting to invest in these companies. And I think it's one of the kind of linchpins of our success.
That makes a lot of sense. And, you talk about investors wanting to invest in this market. Larry Fink, BlackRock CEO, spoke extensively in their annual letter about the importance of democratizing access to the private markets. Historically, there's been a huge barrier. And what has made this market, or the private markets more broadly, so exclusive, and what's been changing to allow more investors to invest in these spaces?
Yeah, well, it's kind of a repetition of history. If you think about even the public stock market, retail investors didn't have access for a while. It was primarily institutions. And then there was the advent of the mutual fund, which got people more access, and then the ETF, et cetera. And you've seen that across other asset classes where that's kind of where you start, kind of institutional access, and find your way into kind of more retail and maybe wealth management access. One of the key reasons is because there's been more technology built out. When EquityZen started in 2013, we really felt like this asset class was really only available if you had millions of dollars available, a really big account at JP Morgan or Morgan Stanley, because the work involved to get you into a private company investment or an alternative investment was quite cumbersome and laborious. And we've really been able to drive down the costs and the structure required to make these investments possible, which allows investors to write smaller checks, which gives you more opportunity.
So how are investors responding now that there is more access? Are individuals actually comfortable with investing in the private markets? What are we seeing from equities users and investors?
Totally. We've seen kind of within all of kind of alts, our customers are growing more comfortable with private markets investments. I really think that probably comes from the fact that a lot of the times they make an investment in a company, it's a company they're familiar with, even though it's still private, right? If you think about kind of 5, 10 years ago, the opportunity to invest in a company like Uber or Coinbase or Spotify, that was something you used all the time. And it kind of goes back to that mantra that they have for public stock investing, which is maybe invest in the companies that you use every day, right? Whether it's Starbucks, et cetera. But if you were only to do that in the public markets, you'd have a relatively finite number of companies that you could invest in. And increasingly, we'll see private investments in the companies that you use all the time. And we think that's a trend that's growing.
Yeah, absolutely. We actually did a survey of our investors that found that our clients were much more comfortable or interested in investing in private companies versus other alternatives like art and collectibles, hedge funds, debt, and whatnot. And I think it really speaks to that point that you mentioned. People understand these businesses. They're not some esoteric instrument that they can't understand. And that's a big part of it. You know, we talked about this a little bit, but let's kind of double click into the access part. Individuals really haven't had access to this market until more recently. You know, something EquityZen was founded for was to provide more access to this market. So what were some of the big barriers that were blocking more investors from being able to participate in the growth of these companies?
Yeah, so we kind of touched on maybe some evolution of the technology, right? Which was that if you could build better technology for these investments to happen, you can typically drive down the cost to make it possible, which means you can allow for more access. That was certainly part one. Part two, I think, was adoption and just awareness. So what we learned, when we first got started was that a lot of investors didn't even know this was possible, that you could invest in a private company. And so by kind of providing more content and research and visibility into our market, basically private markets, we found that adoption increased and people got a bit more comfortable. Also, the complexity was something hard to navigate. If you buy a share of IBM or maybe realistically NVIDIA, right, in your Fidelity brokerage account, you knew how to do it. You clicked a couple buttons, you clicked submit trade was done. But to understand how to do that for a private company was a bit more cumbersome. And so we've been able to really, again, with tech, make that investment process almost feel as simple as if you're doing it in kind of your retail brokerage account. I think that was kind of the big unlock for us.
Sure. And, EquityZen is solving a lot of these barriers that you mentioned and using technology to do so. Can you talk a little bit more about, how we provide access and how we've simplified that process for investors?
Yeah, totally. So, it used to kind of be this Silicon Valley boys club, really, where if you wanted to invest in kind of the next great private company, you had to know somebody or you had to be at the right country club or what have you. And what we felt like we could solve was that if we addressed a big part of private markets, a problem in private markets, which was illiquidity, right, for people that held shares of these private companies, if we could solve that problem for them, we could bring that access to a broader audience, right? Our whole thing has been about bringing private markets to the public, and by building a platform that allowed shareholders of these private companies to sell their shares and understand how to do it and make it as simple as possible, that's brought this opportunity not just to, the 0.1% or the 1%, but to a broader audience. And that's kind of been in our DNA this whole time. Make it simple, broaden the access, educate customers on what's available.
So, we've talked about how investors are more interested in this market. They're trying to or working with advisors to increase their allocation to alternatives in private markets. For those who are new to the market and looking to get started, how would you suggest they do that and what resources might be available to them?
Well, first and foremost, do your research, right? Read about these investments, read about the companies. We make this type of information available, but we always encourage people to broaden kind of their analysis wherever they can. I think that's probably the first part. The second piece is that you should really think about how this investment will fit into your existing portfolio. Usually a good discussion to have with your wealth manager. Dip your toes in slowly, like anything else. A lot of these investments are still relatively illiquid compared to buying, public shares and what have you. And the other thing I would say is look at what type of different offerings are available, right? It might be that you get to invest in a single company, which you're very bullish on, and that works, but of course brings some concentration risk. Or you might want to invest in more of a diversified vehicle, right? Something that EquityZen provides where you make one investment that's still kind of right size for a retail or investor or a wealth management's client's investment profile, but you'll get exposure to say 10 or 20 companies instead of just the one. So I'd encourage people to do both those things.
So the evidence has really compelling. Private markets are no longer really a fringe strategy, but they're becoming this core part of an overall diversified portfolio, especially in, the current market. Platforms like EquityZen are opening the pathway for access to a broader number of shareholders, and something we're really excited about. So Phil, thanks for joining us to share more about this topic. If you're interested in learning more, please check out www.equityzen.com/investor.